You are. I can't hear you at all. Are you messing with me? You're completely
Well,
blank. There you go.
welcome everybody to the Chinchilla Picking Podcast. It is February 22nd, 2026 at 4:08 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. As always, my name is David Underwood, and as always, I'm joined by the one and only the Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
Good. I'm disappointed that you don't like my picks for my intros.
You know what? I don't like AI's picks. How about that?
Okay, that's fine.
Yes, Brandon was putting together some AI created music for an intro, possible intro for our show, and I was like, no. He asked my opinion. You asked my opinion. I'm going to tell you my opinion. I'm not gonna. Sorry, I'm not. I'm not gonna flavor it, make it nice and fluffy for you.
I presented him with stylings of Southern classic rock, 90s rap, and then
I wouldn't even call
and
that
then
'90s
something I
rap.
know, some sort of emo. And then there's another one that you didn't get to hear that is a love R&B vibe.
Yeah, that's a hard no before I even hear it. No. Well, I thank you for trying, but yeah, that's not gonna happen. Hey, USA men's hockey won gold in a great game. They beat Canada. So that was a good game. Men's first Olympic gold for men's hockey since 1980.
Nice.
So fabulous job. Congratulations to them. USA has won more gold medals this time around than any other time before. So congratulations to the US Olympic team that went out there and got all those gold medals. Fantastic job.
Nice.
Good job, USA. Now that the Olympics have or are wrapping up, I believe the last events might be going on right now. But wrapping up, good Olympics for the United States. NBC did not do that well, I don't believe. I believe there was a lot of issues. I think the Canadian curling team added some viewership. The U.S. men's hockey team added some viewership at different times. The dog getting on the track added some viewership, but yeah, and I think a lot of people stayed away, which I don't understand, but sure. I mean, I watch Olympics every time.
I don't.
Why
Sometimes
not?
I do. I mean, I like the swimming in the summer Olympics. I don't know. There's NBA games on, so I get my fill of sports from that.
All right. So I watch Olympics because I grew up overseas, and when you're overseas as an American, back then, this was in the '80s and early '90s, and you saw another American, you're like, hey, you, me, best friend, we are best friends. And that's how it was. And it was, hey, proud, proud to be American, proud to be USA. US men's soccer made the first World Cup in like 40 years in 1990, and they did fantastic. It was a great time to be an American. And yeah, we were doing. You had the best economy in the world, humming along in the '80s. It was fantastic, and but we just stuck with each other no matter what. When we're overseas, when we're with another American, and we cheered for USA because it's what brought us together as Americans. And I can't hear you. You're muted, so I'm going to keep talking. But yeah, it's what brought us together, and it made us become instant friends when you're overseas and you see another American. So it was a fantastic time, and that's why I cheer for the Olympics.
I
That's why I love
experienced
the Olympics.
I experienced that a little bit when I was in Korea for 3 months in like 2009 or whenever that was, and you sort of every time you see somebody, it's like, hey, somebody who speaks English. You got to have a conversation with them.
Right?
What state are you from? And and then also one thing that I noticed when you're overseas as an American, if you tell them that you've never been to Las Vegas, they kind of like their mind blows. You're in the United States. Why haven't you been there? Well, it's a 3,000 mile trip, but yeah.
Yeah.
So
Yeah.
I mean, I kind of get where you're coming from on it. I don't know. None of the sports really interest me. I've never really been a hockey fan.
Really?
Yeah.
I love hockey. Hockey's a good sport. I mean, I ski, I snowboard, I do both. So I love those events, in particular. I can't ice skate. I've never tried. I probably could pick it up, but I've never tried it. But yeah, it's just I like trying different things and different events. So
How many broken bones do you think we would have just trying as adults?
trying different things.
Yeah, yeah. But well, as far as no, just ice skating. Do you think that you'd break any? Because I would definitely
No,
break a.
I don't think I would break any bones.
I would for sure break a bone.
I wouldn't. There's no way.
I'm not. Yeah, that's why I'm like, all right, I got to have better insurance before I ski or ice skates.
Ah, you're
Falling
fine.
over as a 40-year-old is different than falling over as a 10-year-old.
I mean, I fell over a million times trying to pick up skiing recently. I'm
Oh,
fine.
that's good.
I'm fine.
Yeah,
So I'm like, yeah. I mean, you say that, but like, yeah. It all depends also on what type of shape you're in. I've been doing
yeah.
CrossFit and actively training boxing again, and actively training other fighting, and actively running 4 days a week for a number of years now. So I've gotten myself back into a decent shape. You
Nice.
know, versus other 40-year-olds.
We should talk about stocks.
Yes, that's why people are listening to us. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. Here to live back and forth, the bicker and the banter right here on the show for you. Brandon, talk about stocks.
All right. Walmart had their earnings last week, and they reported a really good. It was a really good quarter. It was the guidance that a lot of people were having issues with. Earnings per
What
share
was the
came in at,
guidance?
well, let me get to that. Earnings per share came in at 74 cents. Forecast was 73 cents. Revenue came in at $190.7 billion. That exceeded $190.4 billion, which was the expectation. Despite that momentum, the company projects sales growth at only 3.5 to 4.5%. And a stock
Why
that
Pertel?
is, huh?
Why?
I'm getting to it.
People want to make money off the show. They don't want to hear you talk for 5 hours. I want to hear why.
I'm getting to it. Just stop interrupting me and let me get to it.
Go
We'll
ahead.
be good. We'll get there. So
All
here's the
right.
point. Listen, great things take time, Dave. You told me that. Here's the point. 3.5% to 4.5% expected growth of the stock where it's valued at right now is not good enough. Here's where they pinpointed their pain points. They said the majority of the company's market share gains in the fourth quarter came from households with annual incomes exceeding $100,000 a year. Now, we've talked about the last couple of years. Wait a minute. Walmart's share of people who make $100,000 a year is growing. And with every quarter, it seems like they've got more and more and more of that market. And that's the result of potential inflation, right? Now, the CEO, John Furner, then went on to say that households earning $50,000 or less a year are under severe financial distress. They said that management explicitly noted that these wallets are stretched, and many consumers in this bracket are managing their spending paycheck to paycheck. Now, uh, this is not new for the global economy where the working class in the United States, at least, is paycheck to paycheck. That's not new. That's been something that's been going on for a very, very long time. What is new is now that mark is at $50,000 a year. Just 5, 6 years ago, you were making $50,000 a year. Say, for example, if you had like one kid and a wife and that was your income, that you could get by on that. These days, you cannot. Now, John Furner, the CEO of Walmart, also mentioned what he thinks is a hiring recession. And he's explained that he thinks that they're constructive on the long term economy overall. They're monitoring specific macro indicators that suggest a cooling labor market. Now, I think we've hit the bottom of the hiring recession. I think we've already been in it, but he is saying this is one thing that he's looking at, and then this is the reason for the muted outlook. Go ahead, Dave.
All right. So first things first. I agree with him on the fact that from the signs I see, and when I
Right.
look at credit card spending, Klarna, Affirm, all these different companies, the things they report, right, and what other companies have said, I see the lower class struggling as well. And they're
Right.
typically the ones that will spend if they get $20 discretionary, they'll spend $20 discretionary. not very astute at saving, and that's just typical of that socioeconomic class level. Uh, I say that, however, but you know, I'm very hesitant to say that it's in a downturn because when you start getting above that, you see people saving, see people contributing 401ks, you see people investing, you see people putting things away and paying bills on time. Now, I agree that there is a hiring recession, and I've reported this on the numbers on this podcast in that the amount of open available jobs and the amount of people who are unemployed leveled off the last time I reported. Now, I haven't looked this number up in what, 3 months since the last 4 months, maybe since the last time I reported
Right.
on the show, around there. But the last time I reported, they were even. And that was the first time they had
Right.
been even in well over almost like 15 years, at
Right.
least, if not longer. Maybe 2008 was the last time they were even. And, or not, sorry, after 2008, right afterwards. So it's been a long time since they were even. I would like to see, I'll look it up next time you get going on some earnings here, and I'll look it up and see what the numbers are. Currently, the but that would give me a better sign of whether or not we're coming out of the jobs recession. I do agree we were in one. Yes, 100%. We did not. We had just as many open jobs as we had many people looking for jobs, which is not a good sign for the economy. Typically, that's going to send unemployment rate tick higher, which it did after I reported it on the show. It did tick higher, but it didn't, it stopped and it leveled out. It didn't continue ticking higher. So I assumed that the number of available jobs moved up again and it got away from the level mark. I didn't check. And so that's something I do need to check.
So, I don't have the numbers in front of me, but that was kind of my view of it as well. I also think that a lot of companies, for many different reasons, including continued inflation, had seen gross profit margins and net profit margins shrink. And in order to maintain guidance for the next year, they wound up laying people off in order to increase the earnings, right? Like, so, yeah, our profit margin shrank a little bit, our net income shrank a little bit, but our earnings per share grew, which you can do that with layoffs. You can grow earnings per share with layoffs, and sometimes investors will be okay with that. But go ahead. What were you going to say?
All right, so I got the numbers right here. You ready?
Mhm.
The number of unemployed people as of January of 2026 in the United States currently, that unemployed is defined by people who are actually looking for a job or did have a job but they got laid off. It's not just anybody who can work, not just 18
Right.
plus. It's people who, anyways, 7.4 million people unemployed. The amount of available jobs in the United States as of January 2026 was 6.5 million. So there's fewer jobs than there are people who are unemployed currently.
Understood.
That's not a good sign. So it did continue the trend of inversing, which it did fully inverse now. And now the amount of unemployed is higher than the amount of available jobs.
Right.
So we are in a job recession, yes.
Right. So he referenced that potential hiring recession. He also mentioned inflation and student loan delinquencies as a possibility for his muted outlook and why
Yeah,
their
because people are
guidance.
being taken to court as of January of 2026. I keep going back to January's numbers because the most recent numbers. People are being taken to court and they are getting their wages garnished now for student loan delinquencies because they just didn't they got used to not paying them and then it just kept getting pushed off, pushed off, pushed off, and finally it said nope, you got to pay them back, and they just weren't used to it. They
Right.
didn't budget accordingly. The
Right.
people who are doing fine, I have people I personally know that had student loans that were being what's the word? Not forgiven, but put in like where you didn't have to make a payment,
Yeah.
and they were being told by the banks that they can't accept payment right now from them. So
Forbearance.
yeah, forbearance or whatever it is. They said their banks told them they can't accept payment, so they were putting it into an escrow account this whole time. The amount of payment they would usually make. So as soon as it came live that they can make a payment, they just moved all that money in there and just made a huge payment off all their student loans, and they're doing fine.
Sure.
Now, the people who took that extra money and started spending it every single month instead of using that to pay down debt or put in the escrow account like those friends of mine did, they're the ones who are suffering and went into delinquency. And now it's all about, to me, Americans have lost the ability to manage money. And there's a whole generation of people that have no idea how to manage money effectively. And that's the problem. And if you could teach Americans as a whole how to, oh, see, you already disagree with me. Go ahead. You
That
disagree. Go
well,
ahead.
because the amount of inflation that we've seen since 2020 has been relatively shocking.
Yeah, it has.
And
I'll give you that. Yes, it has.
and some people haven't seen their incomes increase with that inflation. Now, if you were
Okay.
like me and you switched jobs and then you got, I didn't purposely switch jobs for that reason, but I did switch jobs in that time period. And every time I switched, I got a decent raise, right? So
I
if you
made a
did
ton of,
that, then you're
yeah.
probably fine. But
You and I made a ton of money during that period in the markets,
right,
percentage wise compared to our portfolios, right? I'm not
right.
talking dollar, percentage wise to our portfolios from where our portfolios were in 2020 to where they're at now. We made a huge increase, both of us, and that put me in a position where Brandon, I just don't care.
Easy
I'm in
money.
I'm
Easy
in that
money.
position now. I got lucky because of all those smart moves that we made,
Sure.
and a lot of it due to this podcast. And I say that and to our listeners, like not necessarily like Brandon and I throwing ideas out there, but it's the back and forth. It's the discussion. It's the fact that I have to research each week for this podcast, force me to actually study the markets even more than what I was. And it forces me to keep an eye on things that I normally wouldn't have kept an eye on things. And so I found certain things. And, I would do this podcast if only two people listen just because of how much it's helped me in my personal investing.
Right. Now, I don't think Walmart's looking for an overall recession here. I mean, their gross profit margin rose 13 basis points. So the 24.93%. Now, normally we always look for a 40% gross margin, but in retail, 24.9 per 3% is a pretty good gross margin. Um, and now on top of that, they're spending 117% of their net income on capital expenditures. That's an aggressive investment rate if you think that we're going to be in a recession. So I don't think they're looking for an overall recession here. Otherwise, that spending wouldn't make any sense whatsoever, and it would be almost completely unsustainable. Now, Walmart's got $41.6 billion in operating cash flows, so not so unsustainable to them compared to where everybody else is. But I don't think they're looking for an overall recession. I think they're looking for the people who are making 100 grand or more, a year to drive this economy and for the soft landing to, be established and for us to move forward from there. That's what I think they're looking for. But go ahead.
Gotcha. I think the people who are looking to really take advantage of this recession and the lower class struggling right now is companies like Klarna. Klarna they raised their guidance going forward. I pulled it up because I remember looking at it and I remember reading it into it. They did raise their guidance, but they're looking more into the long-term financing programs, such as like, hey, if I have a man, it used to be TVs, Brandon. I don't know what it is now. MacBook. I want to get a MacBook, and Klarna's going to do the buy now, pay later thing for me. They'll stretch it out over 2, 3 years instead of like 6 months. And so that stretches out their return, but their actual percentage of return is going to be even higher in the long run because of this. And so they're in partnerships with, companies like I want to quote this correctly: Stripe, Nexi, WordPay, and JP Morgan Payments. So they're
Right.
making some good partnerships here to grow, and Klarna's really taking advantage of this type of environment. I think Walmart's a beneficiary because of the low prices Walmart has. I'm a buyer of Walmart off the if they dipped. Did they dip off these earnings numbers?
They
I
did.
didn't
They
look.
did. I don't know how much off the top of my head, but they did dip on them
All right, so I'll take
because
a
of the
look and see if they're
guidance.
still down because that would be a buying opportunity.
I think the price is still heavily overvalued. And now, if you buy it now, of course, it's Walmart. Eventually, it will grow into the value, and eventually, you're going to wind up profitable on it most likely. But I think you got better opportunities in Nvidia and other tech companies that have been so beat down, but yet really their business has not suffered whatsoever. Walmart is trading right now at a forward peg ratio of 2, meaning that you're paying an extra dollar for every dollar of earnings that they're saying they're going to have. And they
Nvidia is not
probably
beat down. Nvidia is up 5% the past month. Nvidia is close to their all-time high. They're at 190 a share.
year to date. Are they down? They were beat down.
Year to date, they are up 0.09%.
Okay, so it's been stagnant year to date, but
They
I mean,
dropped in February. They dropped the beginning of February down to 170. Very sharp. It's a very sharp V, and it came
yeah,
right back up.
gotcha. I mean, I'd still look more at tech. I would even look at software companies, for example. Palo Alto Networks got no long term debt. That's one that I would be okay with buying right now. Walmart only 3.5% to 4.5% earnings growth, and they're probably guiding conservatively here, but still, even just a little bit above that is. I'm looking at the stock and I'm just thinking it's too expensive right now,
What
and I
about
could be.
Costco as a
I could be
retailer?
wrong. Costco, I don't know off the top of my
As a
head. I haven't looked
retailer,
at it
no.
in a long time. I haven't
See,
looked at it.
I've always said Walmart and Costco are the only two retailers I would look at ever investing in because I don't like retail personally.
Right.
For my personal investments. But those, if I was going to invest in retail, it'd be Walmart or Costco, and
Okay.
that would be it because they consistently move up and they have a consistent base there that will always shop at Walmart and Costco.
Right.
Walmart has the Sam's Clubs, which people often don't include that mentally in Walmart, but it is part of Walmart, and that feeds into Walmart's money as Sam's Club.
And Sam's Club has very, very loyal customers. I mean, they shop there every week.
I mean, there you go, Brandon. See,
Yeah,
I mean,
I agree.
Walmart's a good play, man.
But let me. I'm gonna transition into Roku here now because
Transition to Roku.
another thing that I'm seeing, another soft landing point that I'm looking at here. It seems like all these tech companies are doing really, really well with their ad tech pivots. So they're making a lot of ad money. Companies are spending a lot of money on SG&A right now. Advertisements is a big deal. And I don't think that you'd be spending this much money on ads advertising if we were going to go into a recession, if people thought that was going to happen. For example, Roku just reported earnings. 88% of revenue is now from ads on their platforms.
Nice.
Um, yeah, and that's something you see from these more mature tech companies. Like we saw it with Apple, right? When Apple started to mature, all their money was coming from subscription services and stuff. And now you're kind of seeing with Roku, it's now coming from ads rather than the hardware. Now, for the second time only, Roku reported a full year positive net income, $88.4 million. A lot of analysts are really saying this is really the first time that we should look at because the last time was 2021 and that was pandemic fueled. And we all knew that that was kind of a one time only indicator of
Yep.
what was going on in streaming. They smashed their Q4 estimates with an earnings per share of 53 cents per share. That doubled. The expectations were 27 cents per share. Um, Now, here's kind of where I'm looking at, and I'm saying, all right, you know what? I'm okay with people jumping into this, but do it cautiously. Their SG&A expenses for themselves were $1.36 billion. That's 65% of gross profit. And what that does is that brings down their net profit margin to just a little over 1%, 1.8% is
That's
their net
slim.
profit. Now, you're dealing with a company that really just went and finally turned a profit on their own without any pandemic fueled craziness. So that I would think if they continue going in the right direction, that's going to increase, but that is very slim, just as you said. And the result of that net profit margin being 1.8%, the return on equity is 3.8%, which is also very slim. So I think fine. If you want to look at this stock, the PEG ratio on this, a price to earnings growth ratio, meaning this is what you're paying for every dollar growth, it's 16 cents for the next 12 months. So you could look at this and say, this is a good value stock. But I would say for myself, if I was buying into it, all right, what do I think the fair value is? Say you do some sort of math on this and you look at it, you say the fair value on it's 50% higher. Sell it as soon as you reach that number, unless the rest of these numbers start to look better. I
Gotcha.
would I would do it as like a medium term 6 month trade and just hope that the valuation catches up with it. I'm not buying it myself. It does not pass my criteria that I have on the Chinchilla Picking podcast that I did for this. But I won't bore Dave with it this time on the show. They only
Nice.
passed like 40% of my criteria. So, but the
I,
valuation, the peg ratio being 0.16,
do
okay.
do you
I
have
understand.
Roku?
I have Roku. Yes, I do have Roku, but I honestly, I got it for free. And I spend most of my time watching my media on the PlayStation 5.
Okay. So I have a Roku TV and it's all built into the TV. I have one TV remote, controls everything, right?
Right,
And it's all built in there. And when I do purchases for movies or my monthly subscription to whatever I'm signed up for, it all goes to Roku for the payment processing. And that is how I believe Roku is making the money. And there's
it
some Roku
exactly.
channels. Roku
Right,
has its own free TV, free channels, but they have ads. And that's also, I don't subscribe to those, but I've seen them on my Roku TV pop up,
right.
and I'm like, nah, I'm good. Yeah.
So the subscription services and the ads, that's where they make the most of the money, like you just said. The hardware, they lose like 20%.
Yeah, because the hardware gets it in your house. So
Right,
I have the TV in my house, and then from there it wants to sell me stuff via the TV. And
right,
it's like, yeah, I it's not hard selling. It's not like it's forcing like ads to pop up as I'm turning on my TV and going to my Hulu or my, Paramount Plus or whatever. It's just there.
right.
So,
So I say maybe if you want to buy it based on valuation, like our buddy did on our group chat. I don't look. I
Mr.
bought pay.
Nick Young,
I
he's a
can't.
contributor to the show.
I bought PayPal. I can't. I can't. Be down on this buying Roku for the same reasons that I bought PayPal. So yeah, and he
Nice.
is a
All right.
contributor to the show. He's been on this episode a few times. I agree with him buying it. I'm not doing it myself. So I'm just saying be
Gotcha.
patient
All
and
right.
watch it.
Fair
This is
enough.
a show me. This is a show me stock. So you have to watch it.
To you. Yeah, I'm not a buyer of it either. Uh, but it sounds good. You guys have both made good cases as to what for to me as to why I would buy it, but I'm not buying it. I want something with higher growth potential.
I also tried to make the cases just then to why not to buy it. Just
I
just to
You sold
dig
me on
away
it by
at
while doing that, you know?
Okay, sure. All right. So do you want me to talk about Nvidia real quick? Because I know you said you wrote
Yeah,
those
yeah.
in
Here,
notes.
let me get I got some quick things to go through here
Sure.
real quick. First thing is the EU. So this headline came out just today at 11:10 a.m. The EU said it will accept no increase in U.S. tariffs after Supreme Court ruling a deal's a deal in quotation marks. So the U.S. basically what happened was when Trump was out there, the Trump administration was implementing tariffs on everybody. The EU, the European Union, came to the table, made a deal, and struck a deal. Now, with this current Supreme Court decision coming out, it could possibly mess up the deal that was struck, and the European Union is coming out on record saying that no, we will not change the deal. A deal is a deal. You have to stick to the agreements of the deal we made with your country, no matter what your Supreme Court says, because it is our Supreme Court, but we did our separately from the administration itself, but separately from an executive order. Separate from that, we made a deal with the EU on trade negotiations.
Right.
It was not an executive order, but an actual deal signed between the United States and the EU. So it is very complicated how this is all going to pan out, Brandon, as far as how everything goes. But legally, when you go in and read the article more, and there's a lot to it, but when you legally go in there and read it, yes, it looks like we are going to have to honor the European Union deal, no matter what the Supreme Court says, because it wasn't an executive order. The Supreme Court was ruling on executive orders and what the executive branch was justifying using to implement tariffs. And they were saying that's not the way you can implement tariffs. Where there
Yeah.
are other ways that the executive branch can implement tariffs, but the way that the current administration did, they're not allowed to do. And that also brings up other questions. What do you do with the money that's already been collected? And there was a discussion back and forth as far as that, but that's to be panned out and handed out later as they determine what happens to that money and what happens going forward with the tariff. All right, so that's the what the current administration is dealing with. Thoughts, Brandon, on the EU deal and what's happening there?
I mean, I was actually going to try to avoid the subject personally because I just don't know. Yeah, it's so you don't like you can't predict it at this point in time. I'm sure there's probably going to be some sort of appeal to it. There's going to be some sort of try. They're going to try to work around it. You don't know what what them if we're going to give the refunds back. What's that going to do to
Well, how
treasuries? I
about
don't know
this?
yet.
How about this? So first off, for just broad question. Say the tariffs and every all the deals don't stay the way they are. Market crashes. Do you agree? Goes down, not
No,
crashes, goes
I
down.
don't necessarily that it does. I don't know.
I would say
But
they do because if the deals fall out of place because of the Supreme Court decision, I say the markets take a downturn. If the deals legally all hold because they were not done by executive orders, but the deals were actually negotiated between the two countries, which is separate and apart from the Supreme Court ruling, which is my argument, that means that everything's fine. I believe that the markets are unaffected by the Supreme Court
well,
ruling.
I don't know what's going to happen with treasuries if the the Supreme Court ruling is that the tariffs have to be reversed and we have to refund, then treasury yields are going to go up and the bond prices are going to go down, and that's going to be a problem for bond investors. However, with that being said, that's actually a positive for Apple and Nvidia and all of their margins. So those people who are selling those bonds might just pile into the Magnificent Seven and hold the stock market up and maybe even drive it higher because those margins are going to increase.
Which it's funny you
So
say that because that's the same argument on Friday the talking heads did said on all the shows, CNBC, Bloomberg, and so on and so forth. And it wasn't not just talking heads; it was actual people from the big companies, J.P. Morgan's, Goldman Sachs, and so on and so forth, were saying the exact same thing you just said.
yeah,
That it would be a boon for the market and the economy in the short term.
and I don't watch them, so I didn't get
Right?
my ideas from them. That was just right off the top of my head.
Yeah. There you
I
go.
like the live conversation we have on this show. I mean, everything that you're hearing, like we do a lot of research and pre-research. I write a lot of things down that I'm reading on the show, but a lot of the conversation that you're hearing is just off the cuff.
Yeah.
So,
All right. The next one is this is kind of more in depth. I'm going to try to make it as layman terms as I can, but some of it I can't. All right. So this is about Bitcoin. So this article came out today at 11 a.m. On the CoinDesk news wires. Came across Reuters, of course. I get everything off Reuters. The headline reads, "To freeze or not to freeze. Satoshi into $440 billion in Bitcoin that is threatened by quantum computing." All of a sudden, everybody's ears perk up. $440 billion in Bitcoin that is threatened by quantum computing. What are they talking about? What they're talking about is that quantum computing, once it reaches a certain level and state, it will be able to break through the ciphering built into the Bitcoin network. And any Bitcoins that have any keys, sorry, so key is a way to access a Bitcoin account. That's how you do transactions, right? Generally, you change your keys after every transaction. That way, your key consistently changes and you're not at risk. Well, there are some Bitcoins that came out at the beginning. People had some keys and they were used on the network once or twice, and then they either are keeping it on the thumb drive or they lost it or they're just freezing it, what have you. It hasn't been touched in years. That's what they're talking about. They're talking about the ability for these quantum computers to now go into those keys that have been used more than once and that hasn't been moved or touched since, and go in there and take that Bitcoin effectively, or and pull it out and bring it to the market. Now, the arguments being made back and forth is that one argument actually put out there by a cryptocurrency company, a major one, said that as soon as a quantum computing company is able to do this, they should, and the reward should be the Bitcoin they are able to get. Which I think is crazy and ludicrous for because that's a whole lot of cash out there, 440 billion dollars in cryptocurrency, possibly that is either lost. And by lost, like that gentleman whose his girlfriend threw out his laptop. Remember that story?
right,
And it had
right.
all that Bitcoin on it. The quantum computing should be able to decipher and get that type of lost Bitcoin. Now, active accounts and active keys that are constantly being switched and used, not affected by this
Okay.
whatsoever. These are ones that haven't been moved or touched in a while. I have some that are in cold storage. This tells me I probably need to eventually pull them out, and I'm probably just going to get rid of it and sell it eventually. Um, yes, this is crazy that I think about this, but the Bitcoin network was created back in what, 2008, 7,
Somewhere around
somewhere around there, and then it was never changed. Every other cryptocurrency and blockchain thing afterwards, the creators are still around and they were able to adapt and change the algorithms and soft and coding within. Bitcoin has not changed, and thus that's why the quantum computing is able, once they are able to and they're able to get up and running, they believe that they will be able to go ahead and crack the ciphering of the older Bitcoin codes from way back in the day. So this is something, and the timeline on this is they estimate quantum computing will be able to do this in about 2 to 3 years from now.
okay. About a week and a half ago, I was driving and I was behind a pretty expensive Ford Raptor truck, and the license plate, the vanity plate was Satoshi, and
Nice.
the license plate cover said "Fix money, fix the world," and I was like, could this be him?
Yeah. No.
That might be him. I don't know.
I like the I
It's an
like
expensive
I
pickup.
mean,
It's an
yeah,
expensive pickup truck.
I like the aspect of having a cryptocurrency and no and getting rid of all the currencies and just use cryptocurrency around the world. I like that aspect because then the government doesn't control it. But they'll find ways to
Yeah,
manipulate
they'll
and
find
control.
backdoor
Yeah.
ways to do it for sure. But I do.
But
I like it too. The libertarian in me loves it.
yeah, yeah. And so I'm all for that. But yeah, this for Bitcoin, this is again this is the second week in a row or third coming down here, and I'm giving a headwind to Bitcoin, and I'm saying I'm at the point where I might just get out of Bitcoin and the other cryptocurrencies, the ones that are able to be changed and maneuver with the times. Again, those are the ones that are going to be the ones that move forward. You know, those are the ones I'm definitely looking at. Ethereum's one of them. Ethereum moved away from the old mining setup to a new type of mining setup, which doesn't burn electricity the way the old mining does.
Yeah.
They
So
were because they were able to change the underlining code, um, because the original writers are still around and they're able to fix it. That's the only problem with Bitcoin is that the original writers are. I mean, if they are still around, they're not touching those coins; they're just sitting there. So
so
we don't know
even
what they're
with
doing.
the recent drop in Bitcoin, you still would possibly sell it. And what do you? Those people that may get the
I got mine for free, Brandon. I'm to me, it's 100% profit.
okay,
I've held it for
because you
forever.
mined it.
Yeah, way. This is a long time ago. Long, 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 long time ago. And I've sold some of it since then, over the years. But um, yeah. So for me, it's not a big deal.
So, but even those people that are able to get those Bitcoins back that were previously lost, do you think that a lot of those get sold?
I don't think no, I don't think those people get him back. It's the quantum computing companies are gonna take them and keep them.
Oh, gotcha.
I don't think they're gonna give them out to each individual. How would you claim it's yours?
That's a good question.
You can't. There's no way to prove it.
Should be illegal, but you can't. Yeah, I guess you
There's
can't
no
prove
way
it.
to
That
prove it. I
sucks.
mean,
That really sucks.
it's a prize out there for the first quantum computing company that can do it. That's why
Wow.
that was the argument made in the cryptocurrency circles. Like that should be their prize for being able to do this.
Okay.
That's a big price, $440 billion. Wow,
Right. Now,
wow.
if I'm walking down the street and I find an envelope full of $50,000, if I don't turn it into the police, I'm pretty certain I get arrested for that, or I could.
Yeah, if you get caught,
Yeah, and that's the thing. Like you can't.
IRS tax evasion.
But
Yeah,
even with that, how can you prove whose money that is? Like, if that's against the law to find money on the ground and then not turn it into the police, then I don't know.
cryptocurrency is not defined as money, is it?
It's in the title.
But it's
But
not
no,
defined as money by the government, right?
it's not. That's true.
It's a security, is it not?
Right. I guess.
So it's like a
Yeah, because
stock.
they tax it.
It's a
So
stock and bond.
they
I
do
just came
tax it.
across some loose bonds. They're mine now.
Well,
I could sell those bear bonds on the market.
I guess so.
Um. Anyways, so I found it interesting. Want to put it out there. Want to put my let everybody know my thoughts on it because I'm a big crypto guy and I own some crypto. And yeah, I still again same sentiment as what I said last time. Bitcoin is slowly moving away from the rest of the cryptocurrencies,
Sure.
and this is a point I believe where you might start to see it. Start to see it. So, all right, Brandon, you have one more thing, and then we got to get out of here.
Yeah, earnings for Nvidia. They're coming this Wednesday, February 25th, 2026. I want to just go over some things to look after for this because I do think that you should buy Nvidia. Whether it goes down or up after earnings, I really don't care. This is a good holding for the long term. Revenue is expected to be around $65.6 billion. That's about a 70% increase year over year. Earnings per share, the consensus on that's $1.52. Gross margins, we're looking at about mid 70% range, probably about 75%. You don't want to see it dip below that. I think any compression there would be a red flag, especially if they say it's in relation to Blackwell. Blackwell, you're going to hear a lot about Blackwell. You're going to hear a lot about Rubin and Blackwell. Those are the two things that you're going to hear a lot about in this earnings
Why
report.
we're hearing a lot about these guys?
Blackwell is the current flagship architecture. It's
It's a
now
chip. It's a chip that they're selling, is
right.
what it is.
It is the current generation. Hopper was the last one. Blackwell is the new one right now that's um, in process. Um, Basically, this is built for generative AI. So this is the stuff that creates the images, the text, and the videos. Rubin is going to be the next one. This is kind of, I guess, the
Did they
agentic.
name this like hurricanes? Like this is the fifth hurricane of the season. We must start it with an R.
This actually, Rubin is named after astronomer Vera Rubin, and I don't really
Okay.
remember why, to be honest with you. So, um, but this is going to be a shift. Well, so Blackwell is good at creating things. Rubin is reasoning. That's our next step in artificial intelligence.
I want my computers to be able to reason. Yes.
Rubin is the thinking for itself, artificial intelligence. Slated to come out the second half of this year, originally slated for 2027, I think, and they actually brought that forward. So it was slated for the last half of this year. You're going to be looking for any manufacturing hiccups or in Blackwell. So what they'll say, okay, we want the ramp on Blackwell, the ramp status. So with that, investors are looking to see if Nvidia has fixed any manufacturing hiccups that they had in the past with Blackwell, and if they have enough chips to meet the crazy demand from companies like Microsoft and Meta. They'll be looking for a roadmap on Rubin, which is basically the schedule for release in the future. So when you hear the ramp and the roadmap, it's the ramp on Blackwell. Are they meeting demand? Rubin roadmap, when will it release, and if they're staying on target there?
Okay. I think I think Nvidia is going to do just fine. They got a
I
number of
really
years
think
before I feel any trouble or competition comes.
Rubin is expected to be close to 5 times faster than Blackwell. So anything that took 10 seconds for AI to answer in the past is now going to be like
2.
seconds.
Yep. I could do math. Basic
And,
math.
and I'm both very excited for this for Rubin and still a little scared, to be honest with you, what this is going to usher in. So what they're saying right now, yes, we can code. We can create things like crappy intro music for Dave and Brandon's podcast. We can do that stuff. Rubin is going to be like, okay, we could be scientists and doctors now.
Yeah, close to it.
Yeah,
Close to it.
that's what's getting.
I can't wait to see what they come up with. I know this is moving fast. I know it's going to be something that's going to drastically change. There's all kinds of theories about what can happen as we move forward with this, but we are a number of years out, and I'm excited to see. I'm excited to see.
Any positive commentary on China would be a plus as well.
And remember, they don't include the China sales in their earnings reports anymore. So any positive like sales, like net pop profit from China is just gravy on top.
Right.
So,
Yep.
all right, Brandon, final thought. What you got?
And they'll also probably be asked about hyperscaler capital expenditures
Capital.
durability. So like Meta, they can continue spending hundreds of billions of dollars here. We'll see what Nvidia has to say about that.
All right, man. Final thought. What you got?
Uh, I just bought PayPal. I want people to be careful with it because it's going to be very, very, very volatile. And I'm not buying it for the long term. I think we see about a 20% upside on it before I get out. Um, Nvidia is always buy right now. That meets every one of my criteria, all 15, including the PEG ratio below 1. I just think you could buy Nvidia, and I have absolutely no idea. Would you say like last week it was up 5%?
Yeah.
People probably buying for earnings. Some of those people probably saw on the news, so who knows what's going to happen after or
Sell
before.
the news.
I
Yep.
genuinely just don't care. Just buy and hold it.
There you go. All right. One thing that is still rising, surprisingly, against everybody's, all the analysts, when this was around $600 share, they said it was overpriced. Priced everything's into it. It's overpriced. We're not buying anymore. We're just holding. It's GE Vernova. However, GE Vernova from that $600 price range has moved up to $830 price range now. It continues to go higher. GE Vernova became a stock 2 years ago on March 2024, 2 years ago, coming up on a 2 year anniversary. If you bought it right when it separated, you would have made a 620% return on your money.
Who said to buy that? Who said to buy it before the
Brandon
split
Beaver
happened,
did.
Dave? Now,
Brandon
I
Beaver
will
did.
say this. I sold it after the split and then rebought it like a year ago. I continuously held GE Aerospace, which has been my best performing stock in my portfolio since then. At one point in time, when I bought GE, when the companies were combined, I was down 20%.
So, all right. Continue of my final thought. Yes, GE
Sorry.
Vernova, if you bought it a year ago, you're still up over 400%. So
Yeah,
it's a
yeah.
great return on your money.
Hey,
Uh,
hey, add in the money that you made it for GE Healthcare and for GE Aerospace. That split off made a lot of people a lot of good money. So,
yes. And Brandon took his time. Thank you, Brandon, for calling that one out. Brandon and I both called out GE Vernova last year. We both bought it around the same time. We both made tons of money off of GE Vernova. Last year, I got out at the end of this year for personal reasons. Brandon stayed in. So, Brandon, congratulations on your GE Vernova return. It continues to push higher for you. I will announce my dividend stocks are all moving higher recently. Now, that's not necessarily a good thing because the dividend stocks I own are safe play dividend stocks. That means that a lot of other people in the markets are also doing the safe play dividend stocks, and by a lot of other people, institutions. So that means that they're advert to risk. They're saying, hey, there's a lot of risk out there. They see the jobs numbers that we just reported today. They're hesitant to invest fully in a lot of discretionary income companies. So they're going to do the safe play and put into these dividend stocks. That's typically what you see during this time. And then once the markets show good numbers, there's usually a downturn in dividend stocks because people are taking the money out and putting it to work in other areas. That's what I see right now. So be careful, but the Mag 7 continue to rise. Apple continues to go higher. Google continues to go higher. And Nvidia continues to go higher. Tesla's bouncing back and forth right around that $400 range. I might do some option plays on it in the next few weeks. We'll see. That's one of my favorite ones to do options on because it goes up and down so much. It's so volatile and the options pay off so well. You can make 20, 30% easily in one day if you are smart and take your time. I don't recommend options for anybody who has been trading less than 2 years. Please get some experience under your belt. Reach out to us, DM us, and one of us can reach out to you.
I want to add something to the dividend players. A lot of those high dividend yielding stocks at 8 to 9%, something like that, that people consider sort of better than treasuries in a way or treasury
Yes.
equivalents. A lot of those, as those stock prices start to rise, the dividend yields go down. So
Yes.
there's a roof on that. So you want to buy the dips on those just like you would with any other stock. But oftentimes there's more of a ceiling on those stocks than there are other growth plays, for example. because those dividend yields start to go down as the price of the stock rises, then people will back off buying.
Exactly, and that's typically what you see, and that's why like Altria Mo, that's one of them that if I've owned forever, right? And I've talked about how much that's gone up. Yeah, it stayed right where it's been at now. It hasn't gone any higher, and that's because it hit that so quote unquote ceiling, Brandon, if you will, to where people are like, this is not worth it now because the dividend has gone down so much in value. Now, for me, my cost basis, the dividend's still high value for myself. I'm up over 10% return on my money on that dividend because I bought it so low. But if you were to buy it right now, it'd be right around 4.5%.
Right.
That's a difference in when you buy these.
Yeah.
And so,
Look at look at
yeah,
look at a very basic Robinhood just line chart, and then you can spot the tops and bottoms of those, and
yeah,
just go based off that.
exactly. There you go. All right. That's all I got. We hope we have been educational, entertaining, and uplifting because we want everyone to make money. Have a good night. Go
Have a good
USA.
night.